Everyone, and welcome to our Connect Carolina user group meeting. So this is our second meeting. It's our first topic that's dedicated to finance. So the topic for today is 7 key concepts for finance. So understanding these key concepts will help you understand the information that you see in InfoPort. It will also help you work in Connect Carolina. So I'm Anita Collins, and I'm the Change Management Lead for the Connect Carolina project. And here with me today is Nicole Shevik.
Hello.
So I'll talk through the first slides and then I'll turn it over to Nicole. Before we dig into the content though, I just want to give you a couple reminders. So one is the purpose of the user group meeting. So just real quick, let's talk about what these meetings are for. So these are deep dives into hot topics. So we're keeping an ear out for the topics that are giving you guys trouble or that you have questions about, or that you might just be ready for more deeper information about. So we'd love to get your input on those. So at the user group meetings, we hand out cards that ask for your suggestions, and we would love to hear what topics you're interested in learning more about for future meetings. These meetings are also a chance for you to ask questions. So of course this one's recorded, so we can't get your questions, but just bring them to the next user group meeting. So the questions, you don't have to limit your questions to the ones that were on the topics that we're covering that day. If we can answer your question, and if we have time, we'll try to answer any questions that you bring. Again, these meetings are open to anyone who uses Connect Carolina. So we're talking about a finance topic, but if you're working on the HR side and have an interest, please come on to the meeting. We would love to have you, and vice versa. You can find the dates and times and topics on the ccinfo.unc.edu website. So there's a user groups tab. So check out that tab for the topics and when the next meetings are scheduled. And do us a favor and please do encourage your coworkers to come. So we'd love to have a big turnout at these meetings. So the more people we have, the better the meetings are, and the more we can get the word out. So please do encourage your coworkers to come along with you to these meetings. Also want to remind you guys about how to get help. So I'm guessing a lot of you guys have called the help desk already, and that's awesome. We do want to say that calling the help desk or contacting them through the web is the best way to get your question or issue answered and make sure it doesn't get lost. Because when you call the help desk, they create a ticket which has a number, and that helps us track it and make sure that it doesn't get lost in the shuffle. If you email the project team, they're always going to try to help you out, but everybody's getting a lot of email messages, and it's easy sometimes to have problems get lost in the shuffle. So please do call the help desk and make sure that your request gets tracked. And another thing is that the more calls we get on a particular topic, the more we know it helps us gauge how big the issue is. So that's just another way to make sure, another reason that it's good to call the help desk with your issues is that it helps us gauge the size of the issue and helps us prioritize our work. So do give the help desk a call if you have an issue. If you can, please include specific examples and screenshots and just as much information as you can put in there. It will just help your ticket get resolved that much faster. So also I wanted to mention that you don't have to wait till you have a problem. If you just have a question about how to do something, that's another reason to call the help desk. So it's perfectly okay to call just, if you haven't done something in a while, give the help desk a call to find out how to do something. It's perfectly fine. You can also call the help desk to request enhancements. So again, if you call the help desk, we'll put in the enhancement request, and it gets in the queue of enhancement requests. And again, if lots of people are asking for that particular enhancement, then it helps us prioritize the work. So that's another good reason to call the help desk. And just as a reminder, so you can call the help desk at 919-962-HELP. You can also put in a ticket over the web. So you can go to help.unc.edu, and then you'll see the link there for creating a help request. And you can do that, if you're working late or up early, you can put in a help ticket that way as well. All right, and also wanted to mention the CC Info website. So it's just lots of good information packed out there. Today I want to point out the resources page. So it's on the training tab, and it says resource documents. You'll see that link. And all the training documents that the Connect Carolina training team have created are out there. Lots of other documents, PowerPoints, various documents we've created. This is a great resource to go out and see what materials you may have missed or may have forgotten that we created. The PDFs of those documents are out there. The searchable help file is out there as well. There's also something new, a new page that we've added. So if you go to the Finance tab, there's a new page that, so you remember all those daily updates and weekly update emails that you've gotten? So we've taken the information from all those updates and we've compiled them into one big table. So we've assigned topics to them and organized them, and they're out now on this one page. And so it'll make it a lot easier for you guys to sort through that information. So we weeded out the information that no longer applies, it kind of is out of date now, and collected all those topics. So just one quick tip though, if you want to search the entire page, you can use the Control F keys on your keyboard. So that's Control F as in Frank. And it's the same search that you probably use in Word or Excel. You can type in a keyword and it'll search the entire page for that keyword. So that's Control F. Okay, and so wanted to point out just a couple more things about the meeting today. One is that we prepared a quiz. So if you want to take a quiz at the end and see if you caught all the concepts, then the link for the quiz is in the same location where you got the link for this webinar. You'll also find links to the handouts there. So we did 2 handouts that write up all the concepts that we're talking about today, and you'll find them you'll find the link where you found the link to this webinar, and you'll also find the handouts on the CC Info resources page. Okay, I think we're actually ready to get started and talk about some concepts. Okay, so before we do, or while we do, I want to run through them real quick, just at a high level, and then we'll dig into each one of them in more detail. Okay, so quickly, so the first concept is that most transactions go through 5 basic steps. The second is that vouchers manage payments in Connect Carolina. Then unposted GL journals are deleted at month end, and I'm thinking some of you have run into that already. The fourth is that our new accounting method is called the accrual method. The fifth is that information about budgets is tracked separately from information about actual transactions. The sixth is that once a transaction is budget checked, you can see it in InfoPort. And the seventh is that unposted vouchers are rolled forward at the end of the month. Okay, so that was the 7 concepts at a high level. Let's dig into each one in more detail. So the first one, most transactions go through 5 basic steps. So let's talk through those. So the first step is to create the transaction. So for example, you create the purchase request or you create the voucher. The second one is that you check for chart field errors. Now, sometimes this is automatic, so it might happen when you save, it might happen when you budget check, and sometimes you have to do it as a separate step, but it has to happen. So this is where the system makes sure that the values you put in the chart fields are valid and work together. The third step is that you budget check. So budget checking is the point where you actually reserve the funds, and it also checks to make sure that you do have enough money. So if you have enough money, it's going to put a hold on those funds for you. The fourth step is that you get the transaction approved. So often this is where your responsibility ends, not always, but the transaction has to go through the approval process. And then the last step, the fifth step, is that you post the transaction. Now this is actually a step in Connect Carolina that either you have to do or it happens behind the scenes. But this is when it makes an official record of the transaction in our accounting system. So this is a done deal. It's not, there's no chance that it's going to be denied at this point. it's an official transaction. Okay, so those are the 5 basic steps. So the next key concept is that vouchers manage payment in Connect Carolina. All right, so the easiest way to talk through this is just to take a process, the process that purchase recs go through, and we'll talk through all the steps that they go through, and then it'll make more sense as to why vouchers are used to manage payments in Connect Carolina. So of course the first step, I know you guys are, a lot of you are familiar with, is that you create the purchase request. And a part of that, the process of creating that purchase request is that you check the chart fields. The next step is that you budget check the requisition. So again, this is where, at this point, this is where you actually, if it passes budget check, this is where you're going to kind of put a hold on the funds for the amount of the purchase request. And the next is that you go have the purchase rec approved. We are doing best case scenario here. We're assuming that it's going to get approved and move smoothly on through. The next step is that Procurement Services creates a purchase order. So they copy the purchase request and do all the work that they need to do to create a purchase order. And now that purchase order gets budget checked. So again, the system has to make sure, like sometimes the purchase request, there's an estimated amount or it's not exactly what you end up paying. When you do the purchase order, the amount is more exact or it's adjusted a little bit. So when you budget check it, maybe it's going to cost a little bit less than you thought. If that's the case, it's going to reduce the amount that's held on your budget to what you're actually purchasing. So again, it's budget checking. Then the Procurement Services dispatches the PO to the vendor. So at that point, they're telling the vendor, it's okay, we'd like you to fill this order. So the vendor's going to actually ship you the goods or they're going to deliver the services. So when you get those goods at your desk, you're going to enter a receipt into Connect Carolina saying, here's how much I actually got. And then as soon as the vendor ships, they're going to want to bill you for it, right? So they're going to send you an invoice. When that invoice arrives, now they can send it electronically or they can send it as paper, and if that's the case, Disbursement Services has to enter it. And this is the key part, so they have to enter it as a voucher. So in Connect Carolina, vouchers are what we use to control payments. So the invoice comes in, and they have to enter it as a voucher. And guess what? That voucher also gets budget checked, just again to make sure of the amounts. Disbursement Services also does what they call a three-way match. So they match up the voucher and the PO and the receipt and make sure all those amounts match. Make sure that the vendor didn't overbill us, for example. And if everything looks good to pay, then they're going to post the voucher. So now this is just the voucher. This is not the actual payment yet. And here's why. So this is important. So when we start working with vendors, we set up what are called payment terms. So you guys are probably familiar with that. So vendors, the payment terms are usually 30 days, which means that when we get that invoice, there's a date on the invoice, and 30 days after that is when the money is due. Now with Connect Carolina, it's a little bit different in that we're not going to pay the invoice the second that it gets entered into the system or as soon after as we can. We're going to hold it until it's due. And that's just a benefit to the university. So it benefits us to hold our money as long as we can and pay it when we have to. So we'll talk more about that in just a second, but that's just an important thing, is that the voucher gets posted. So the voucher at that point becomes an official record as part of our accounting system, but we haven't actually paid it yet, okay? So the next step is to actually pay the voucher. And so this is, let me go ahead and show the next square there. So we pay the voucher and then the payment gets posted. So what this means is that we have a separate step for posting the voucher and then posting the payment. And now depending on our terms with the vendor, we could be really speedy about getting the voucher entered and approved and entered into the system and posted, but it could still be 2 or 3 weeks before a check gets cut to pay that voucher. And that's just a key concept to try to get a handle on, especially when you're looking in Infoport for when things are paid. So there can be a time lag between posting the voucher and posting the payment. Okay. All right, so key takeaways from that long process there. So one is that every payment against a purchase order has a voucher associated with it. So even vendor catalog orders. So if you make a vendor catalog order, we're going to pay for that order with a voucher. So when you're looking in Infoport, you'll be able to see those matching up. Another key concept is that your available budget is reduced when you budget check the purchase request. Okay, so that's a little bit different, but when you budget check that purchase request is the first time that those funds are going to be held so that you can pay for that request. Okay. Other key concept is that you'll see the voucher in Infoport usually several weeks before it's paid. So remember, again, there's that time lag between when we put in the voucher and when it actually gets paid. And so the system actually watches overnight every night to see which vouchers have both been posted and have met their due date. And so it says, okay, all these they've been posted, and now I can see that the date they're due to the vendor has come up, and so that's when it actually cuts the payment, and it can be weeks between when the voucher gets posted and when it actually gets paid. All right, so that was a big concept. So let's move on to the next one, which is that unposted journals are deleted at month end. Okay, so let's talk just real quick through the process for journals, and it's much shorter than the one for purchase recs. So the first one is that you create the journal, and so we're calling it GL journals just to distinguish it from budget journals. So we had caused a little confusion there early on. So hoping that makes it a little bit clearer.
Sometimes people call it campus journals. It's the same thing.
That's right. That's right. Okay, so the next step is to edit and budget check the GL journal just to make sure that the chart fields are okay and to check the budget as well. Then we get the journal approved, and then it gets posted. So again, it gets there's a posting step as well. So there's just the things to understand about journals is, one is that we can't close the month if there's an unposted GL journal. So that's just the way Connect Carolina works, is that if there's an unposted GL journal, then we can't close the month. So what this means to you is that you need to get the GL journal through departmental approvals by the date that Accounting Services tells you. So that's usually a few days before the end of the month, and the dates have been coming out in those update emails that Janet Kelly Scholes sends once a week or so. So keep an eye out for that. But so usually if you've gotten it to the point where it's completely approved, it will post and won't be deleted. So you don't have to worry quite as much about the actual posting step, but making sure that it gets through the approval process is the key there. Now, there's a query out there that you can use to see which journals haven't posted. So I don't know how many of you guys have taken a look at what queries are out there. There's quite a few. We have a recorded webinar out on the CC Info resources page that introduces you to the queries, and it tells you how to run them. There's also like a quick reference card, I think. But the one you need is here on the screen. I'm not going to read it off to you because it's fairly cryptic, but it has GL journal kind of in code there. And it shows you which ones are not posted, okay? All right, so let's move on to our next concept, and that is our new accounting method is the accrual method. Now, we're going to talk about accounting methods, and I'm not going to go into super detail because we just need to know enough about this to understand some of the information that we're seeing in Infoport and Connect Carolina. So we'll talk about this at a pretty high level. But talking about the accrual method, so before Connect Carolina, the university used what's called cash basis accounting, and now we use accrual accounting. So the main difference between those two is the timing. So it's the timing for when we account for revenue and expenses. So with the cash method, We recorded revenue when the money was received. So when the money actually came in the door, that's when we made a record to say, hey, we got this money. With the cash method, when we recorded expenses when we actually paid the money out, so when the money went out the door. So we're talking about dealing with cash coming in and cash going out, and that's how the cash method works. But now that we're using the accrual method, we record the revenue when we earn it. So even if the cash hasn't come in the door, if we know we've earned it, so we've sold something, we sold a registration or something, that's when we make a record of it. We also record an expense for goods and services when we make the purchase. So when we do a purchase, we know we're going to pay that money, so we're going to go ahead and record the expense at that time and not when the money actually goes out the door. So it's a timing thing. So with the accrual method, we're going to make a record of things earlier in the process. Okay, so let's do some examples to hopefully make that clearer. So the first example is money coming in. So let's say you sell a $1,000 conference registration. So with the cash method, which is our old way, you record $1,000 revenue when you receive the check. So when the money actually comes in the door, that's when you make the record of it. With the accrual method, you record the $1,000 revenue immediately when you sell the registration, even if you receive the money a few weeks later. So the key here is I made that sale, and that's when I make a record of that sale. So that's the accrual method. Example 2 is money going. Let's take a look at an example of money going out. So let's say you receive an electric bill for $1,200. With the cash method, so again, old way, you record the $1,200 expense when you actually pay the bill. So again, money going out the door is when you record it for cash. With the accrual method, you record the $1,200 expense the day you receive the bill. So again, when that bill comes in the door, we know we are really going to have to pay that if we want to keep our lights on, right? So with the accrual method, we go ahead and make a record of it, and it adjusts, it's a record in our books on that day, not the day that we actually pay that bill. Okay, so why is all that important to know? Okay, so for one thing, using the accrual method gives the university a more accurate picture of where our money is from month to month, because it's not so much dependent on when we cut checks or when we receive checks, but when we actually make purchases or receive orders and that kind of thing. But a challenge is that we still have to report to the state of North Carolina using the cash method. So that also, switching to the accrual method also affects when you see information in an info port. So we'll talk more about that in just a minute. All right, so at this point, I'm going to turn it over to Nicole, who's going to take us through the rest of the concepts.
All right. And so our next concept, concept 5, budgets and actuals are tracked separately. So budgets, when we're saying budgets, what we're talking about is how much money you expect to receive and how you plan to use it. So for example, on our state funds, we have an allocation of how much money we expect to have to spend for the fiscal year. So that's our budget, and we know how we plan to spend that money. Actuals, that's how you actually spend it. So we actually spend it on SPA personnel and EPA personnel. We spent less in supplies than we had planned to. So again, budget, the money you expect to receive, how you plan to spend it. Actuals, how you actually spend that money. So the university is tracking that information in ledgers. So we have our commitment control ledger. Is going to talk about that in just a minute, and an actuals ledger. You can think of these things, ledger's a fancy term for a checkbook. All right, so think of these the way you think of a checkbook. You keep track, hopefully, you're keeping track of your transactions in a checkbook or a spreadsheet or however you do it at home, right? But you have to do this at home as well as at work. You have to know how much money you expect to come in and how much money you expect to go out. But we keep our information in different checkbooks. So our budget information, how much we believe we're going to have this year and what we anticipate spending it on, is kept in one checkbook. and then what we actually spend is kept in another checkbook. And we're going to talk about that in a little bit of detail. So your budgets versus actuals, again, just kind of reminding you these things are tracked separately, and they're tracked in these different commitment control or actuals ledgers. So for budget information, we track all of that in the commitment control ledgers. And when you hear the term commitment control, if you've had anything to do with budgets in Connect Carolina, you've seen that when you follow your menu path, those breadcrumbs take you through commitment control. It's where you enter budget journals and budget transfers. That's where we store our rules, okay? So we have a different set of rules for how we budget state funds than we have for how we budget S&A funds, okay? We have different rules for how we can spend trust funds than how we can spend state funds. And those rules are in commitment control. So there are 7 ledgers, all right, in commitment control, and 7 budget ledgers you can think of. And you guys see those right now in InfoPort on the Transactions tab. So when you go to the Transactions tab, there's a filter that says Ledgers, and if you click on that little drop-down arrow, a whole list comes up. And you'll see things like F&A_BUD, and you'll see F&A_expense and encumbrance. And you have 4 expense ledgers and 3 revenue ledgers. And these are just different places where we track those transactions. So I need to talk to you guys about how a purchase rec starts out, and it's a pre-encumbrance. That's one of the buckets, one of the checkbooks, if you will. And so it starts out as a pre-encumbrance, and it can move to an encumbrance and then to an expense. And again, we have our budget. So these are just different places where we can track our transactions through the process. Now, once that transaction is paid, or excuse me, once that transaction is posted, okay, this is really important, right? Once that transaction is posted, it is officially on the books. It will be paid, okay? It has not been paid, but once it's posted, it absolutely will be paid. And when it is posted, that is on our official record for that month. So when the university reports out to the state, they are reporting what has posted in a month. And that's on our actuals ledger, okay? So you can kind of think about your budget versus your actuals. Your budget, think about your own personal checkbook, okay? So maybe you've got this credit card balance you've been meaning to spend down, and so you budget to put some extra toward that credit card balance. That's what you budget. But what you actually spend is on a new pair of shoes, right? You follow me? So what you plan to do versus what you really do, all right? And that's kind of the key. That's important because you're going to see those things in InfoPort. Okay, so where you will spend the vast majority of your time is in the commitment control ledgers, because that is where we have the information we need to reconcile. So our budget ledgers, the commitment control ledgers, that has all the information you need. So for example, when you look at a transaction, you can see who the vendor is, you can see the vendor ID, you can see the date, you can see the actual amount. When things hit the actuals ledger, they normally are a whole group of transactions that kind of hit all at once. So it could be, you know, one transaction on the actuals ledger for $10,000, but there might be 50 transactions that make up that $10,000. Well, you can't reconcile with that. You can't make heads or tails of that. So you have to use what you see in the budgets ledgers to really monitor what's happening with your transactions and to do your reconciliation, okay? And again, that is on the Transactions tab in InfoPort. So when you go into InfoPort and you're in Department Accounting, you see Transactions and you'll see a tab called GL Transactions. And you can just remember that that Transactions tab is where you will do your day-to-day accounting work. It's where you'll do your recon, because it has the information you need to really, again, make heads or tails of it, okay? And the actuals, that's what you're going to see on that GL Transactions tab. Now, depending on when you hear this, the name of that tab is going to change. I believe it's going to, let me not even say it, because I can't remember exactly what it's going to change to. But I know they're planning to change that to make it a little more clear, but just be aware of that, okay? All right. So I need to talk to you guys about these steps. So these all of our transactions are going through these steps. We're creating the transaction, we're checking the chart fields, we budget check that transaction, it's hopefully approved, and then it's posted. And you know, we're saying this several times because it is so important, and it's also so different than how we've worked in the past. But depending on how long it takes to get that voucher approved, you could have weeks between when it's posted and when it's paid. All right, so just keep that in mind. As soon as that voucher is budget checked successfully, all right, as soon as it is successfully budget checked, you are going to see that in InfoPort. All right, it will be in an expense in InfoPort, and that's what really throws a lot of us off, because we expect an expense to mean the check is cut and the money's out the door, and that's not our world anymore. Okay, so what we're saying is we plan to spend this money. We have an obligation to spend this money, and so now we see that voucher as an expense. Once it's posted, we know for certain we'll be spending that money. There's no backing out of it at that point, okay, and it's going to hit our books. But just remember, there could be a wide array of time between when you approve it, when it's posted, and when it's paid. All right, so why is this important? Well, because I'm telling you it's important, and because once that's budget checked, which I was just kind of alluding to, you're going to see it in InfoPort. So let's talk about this. All right, InfoPort, it's really important to understand the relationship between how the information gets from Connect Carolina to how it gets to InfoPort. So just at a really high level, you will enter today, whatever day it is when you're listening to this, you enter a transaction today in Connect Carolina. Overnight, that information is fed into InfoPort, and you will see it tomorrow in InfoPort, all right? And you're going to see that on the Transactions tab in InfoPort, because again, that's where we have the detail we need to make heads and tails of our transactions. That's where, and that Transactions tab is supported by the Commitment Control Ledgers. Now, remember, just because you see that transaction doesn't mean it's been approved or posted. So this is really key with our vouchers, because when you submit a check request for someone, a campus voucher, that automatically, when it is successfully budget checked, it becomes an expense. I didn't say when it's approved. I didn't say when it's posted or paid. I said when it is successfully budget checked, it becomes an expense. So that's really key to understand. That doesn't mean that it's ready to reconcile because it's an expense. And you guys know this because you're looking at all these expenses and you're saying, well, this hasn't even been approved. I don't even know if it will be approved. What do I do with this? So a couple of things to just be aware of is that once it is successfully budget checked, it's an expense, as I've said. Once it's posted, it will be there forever. And as soon as it's posted, you will see in InfoPort, or I guess I should say the next day, because it'll get posted today in Connect Carolina, and it will be visible tomorrow in InfoPort. But once it is posted, then you will see a Y in the Recon Ready column. And that lets you know that, yes, that transaction is ready to be reconciled and that it's not going anywhere. It will absolutely book in the current month, okay? All right. Unposted vouchers are rolled forward at the end of the month. This is why that Recon Ready is so important. So we have, in order for our reports to the state to be accurate, our commitment control ledger and our actual ledgers have to match. Now, because if I were listening to me, I would say, well, now you're telling me I have a commitment control ledger and an actuals ledger, and actuals what's actually cut and out the door. Why am I not using that to reconcile? Well, because the actuals ledger doesn't have the detailed information you need to reconcile. Remember that example I gave you where you have a transaction in the actuals ledger for $10,000 and there might be 50 transactions making up that total, right? But it's the actuals ledger that we use to report to the state. Now, let me just make a point. If you ever have to provide official reporting to any organization, you need to do it from the actuals ledger. All right, and you certainly can compare your totals in your commitment control ledgers to the totals in the actuals ledger because you might need that detail that comes out of commitment control. But our official reporting that the university gives the state is from actuals, and you should have your official reporting coming out of the actuals ledger as well, okay? And we're going to be doing some additional reporting classes and different things kind of coming up, so we can talk about that a little bit more. But I just want to sort of throw that out there while I have this captive audience. But they have to match, because this is why we're rolling forward our unposted vouchers, because if we don't roll those forward, then the amounts that we have in expense could change. And we can't let our numbers change after we've reported to the great state of North Carolina how much we spent. That would get our hands popped, and we don't want to do that. That could get us in a lot of trouble. So we have to make sure that we have closed that expense checkbook for the month, okay? So if that voucher has been budget checked, it's an expense and it's sitting there, but if it has not posted, it will roll forward into the next month. So the way you know that something has rolled forward, besides the fact that it disappears from the current month, but the way you can tell is that it will have its accounting date will change, okay? So you entered this voucher, let's say, on March 2nd, and it doesn't get posted for whatever reason by the end of the month. That would be a really long time for it not to get posted. Maybe let's say March 25th. You enter it on March 25th, and it is not posted in the month of March, then it will roll forward, and its accounting date will become April 1st. Okay, and so that's why we have to make sure that our balances match the balances that we report to the state. And the way to ensure that is by making sure that all of our unposted vouchers are rolled forward. So that Recon Ready column that I mentioned to you earlier, that is going to be so helpful for you, because you don't have to wait until month end to do your reconciliation. In fact, if you look at some of the Recon documents that we have online and some of the recorded webinars that or demos that we're going to be doing, you'll hear me say, don't wait until the end of the month. That Recon Ready column lets you know that that voucher is not going anywhere. It will book in the month that it's in when it has the Y in the column, because it's posted. So Y in the Recon Ready column equals posted. All right, it doesn't mean it's paid. It means it's posted. And remember, payment can come days and days or weeks later depending on the payment terms that we have. But it means it's posted, which means the university is going to report that on its books to the state, and it means you should report it on your books to whomever you're doing your reporting. Okay? So that Recon Ready column is really going to be a useful tool for you to use when you're looking at the Transactions tab in InfoPort. All right? So a couple of takeaways for you. Just remember that when a transaction is budget checked, you will see it in InfoPort. And depending on where it is in its process determines whether or not you see it in a pre-encumbrance, an encumbrance, an expense. It just depends on, kind of where it is in the process. Only vouchers are going to roll forward. So Anita told you guys earlier that GL journals or campus journals, which however you want to term it, those will be deleted at month end if they have not been once they're fully approved, then they'll be posted. But if they haven't been posted, they have to be deleted, okay? So only vouchers will roll forward. So don't expect that GL journal to show up next month. It won't, all right? The Recon Ready tab, use that, rely on that. That's a really good tool for you. That lets you know that that transaction is ready to reconcile, which means it will not roll forward. It's not going to go anywhere. It's going to stay in that month. All right, so let's just recap, because we have covered a tremendous amount of content with you guys over the last 40 minutes or so. So the first thing, most transactions go through 5 basic steps. Our second concept, vouchers manage payments in Connect Carolina. Now remember, Staples orders, those ePro vendor catalogs, they have to get paid somehow, and they're paid by vouchers. And that's that really great flow screen that Anita showed you with the flow from purchase rate all the way through payment. All right, concept number 3, unposted GL journals are deleted at month end. Deleted, not saved, not there for you to pick up later. They're gone. Okay, so make sure you pay attention to those deadlines that we get in emails that things have to make it through departmental workflow. You don't want to kind of submit something later and then it gets deleted. That could be a lot of lost work. You don't want to do that. Fourth, our new accounting method is called the accrual method. So again, just reminding us that versus what we had previously, which was the cash method, we now have an accrual method. So we have to record our revenue or record our expenses as soon as we know that it's either coming in the door or we're planning for it to go out the door. So it's not about payment anymore. Okay. Concept number 5, information about budgets is tracked separately from information about actuals. So again, remember our budget, that's what the money we expect to get in this year. It's how we anticipate using our money. The actuals transactions are how we actually spend those dollars, or the dollars that are actually received in the case of revenue. But it is good to remember that at the end of the month, your expense numbers and your actuals numbers should match, because we kind of close our month out in order to report back to the state. We close our expenses out, I should say, in order to report back to the state. Once a transaction is budget checked, you'll see it in InfoPort, and again, depending on where it is in the process, you might see it in different ledgers in InfoPort, but you will see it the next day. Information is entered in Connect Carolina today. It is viewable in InfoPort tomorrow. And then finally, unposted vouchers are rolled forward at the end of the month. And that's just to make sure, kind of back to point number 5 there, that we keep our expenses equal to our actuals at the end of the month because of how we have to report back to the state on a cash basis. So nothing else gets rolled forward, just your vouchers. All right, and again, only vouchers that have not been posted. And you know they haven't been posted if they do not have a Y in the Recon Ready column on the Transactions tab in InfoPort. All right, so you guys had your quiz. Hopefully you have the handouts that you're using as we're walking through the webinar today. You can go back and look at the quiz. I encourage you to do that because I thought it was kind of fun to take that. It made me feel smart. Sometimes, you know, it's nice to have easy wins. Some days aren't as easy as others, so give yourself an easy win and go back and do that quiz. So our next finance user group meeting is at 11 o'clock on March 20th. That is going to be in the Genome Sciences building in G100. Genome Sciences is the one kind of over near the Stone Center. We've had several, actually our last user group, the big kickoff user group was in Genome Sciences. Yeah. So we're going to be in that big room again. Yeah. And I'll let Anita say anything she has to say.
I just want to say thanks for listening today. If you've made it to the end, that's awesome. So looking forward to seeing you. Please do bring your friends to the next meeting. We will be webcasting the meeting. We had some trouble with the last one, but we think we have a solution. So we will be webcasting it, but we would also love to see you in person. So thanks all. Thanks for joining today, and we'll see you again on March 20th.